Monthly dividend stocks allow investors to create recurring passive income. This regularity corresponds well with the schedule of many recurring invoices, allowing an investor to offset expenses with dividend income. Monthly dividend stocks are therefore perfect for retirees or other investors who rely on their portfolios for income. Here's a closer look at the top monthly high-yield dividend stocks, with monthly dividend payments in mind. Because of this combination, these stocks are ideal for generating passive income. The best stocks for monthly dividends. In early 2022, about 50 stocks paid a monthly dividend. However, not all of them are worthwhile for an investor to consider. Many did not provide a higher than average dividend yield. Others, on the other hand, appeared to be at a larger risk of lowering payouts if market conditions deteriorated. This significantly reduces the number of alternatives. Here's a list of the greatest dividend stocks to think about. But before we get going, make sure to like this video and subscribe for more videos. Number 1 is Realty Agree. Agree Realty is a REIT that invests in real estate, REIT. Because they create regular rental income, these companies frequently make good monthly dividend stocks. This REIT holds freestanding retail properties that are leased on a triple net basis, which means that the tenants are responsible for building insurance, upkeep, and real estate taxes. It focuses on holding properties that are leased to critical merchants including groceries, home improvement, dollar stores, and drug stores, which are less vulnerable to disruption from e-commerce or a recession. Agree Realty is able to produce consistent rental income to pay its dividend through this technique. In January 2021, Agree Realty shifted from a quarterly to a monthly dividend payment schedule. Overall, it has a strong dividend track record. Over the last decade, this REIT's dividend has climbed at a compound annual rate of 5.5%. This growing tendency is expected to continue as Agree Realty expands its portfolio. In 2021, the retail REIT acquired a total of $1.4 billion in properties, strengthening its rental income and dividend-paying potential. Agree Realty has a robust balance sheet that will help it finance its future growth. As a result, it expects to acquire another $1.1 billion to $1.3 billion in real estate in 2022 to sustain continued dividend increases. Number 2 is EPR characteristics. Another REIT is EPR Properties. It specializes in the ownership of experiential real estate, such as movie theaters, eat and play venues, ski resorts, and gambling facilities. Signing triple net leases with venue operators secures these properties. The epidemic of COVID-19 had a tremendous impact on experiential real estate. Many of these facilities were forced to temporarily close or operate at reduced capacity. As a result of their inability to pay rent, EPR Properties was obliged to cease its monthly dividend in 2020. However, with vaccines becoming more readily available, many people are regaining their confidence to enjoy events outside the home. As a result, EPR tenants are catching up on their rent. This permitted this REIT to continue paying out monthly dividends in July 2021. While ERP Properties already has a high yield, the company may raise it in the future as it develops its portfolio. It entered 2022 with plenty of cash and a robust bank sheet, allowing it to invest in more experiential real estate. With movie theaters under threat from online streaming, EPR intends to focus on purchasing additional attraction-related properties that consumers can only experience outside the home. This could increase the dividend's long-term viability. Number 3 is Gladstone Commercial Corporation. Gladstone Commercial is a multi-asset REIT. It concentrates on owning net leased commercial and industrial properties in the United States, which account for 48% of its portfolio, as well as some retail and medical office buildings. This REIT focuses on secondary markets as well because they provide larger investment yields. Gladstone is able to pay a constant dividend because of this technique, which generates relatively reliable income. This REIT has paid more than 200 consecutive monthly dividends that have been equal to or greater than the previous month's amount. It provides a large yield while growing slowly. Gladstone Commercial has steadily expanded its portfolio over the years by acquiring additional office and industrial properties. It entered 2022 with ample liquidity and solid financials to support its monthly payout and continue expanding its portfolio. Number 4 is LTC Real Estate. LTC Properties is a healthcare real estate investment trust, REIT. It primarily invests in senior housing and skilled nursing facilities, which are secured by triple net leases, mortgage loans, and other cash-generating investment structures. This technique ensures that the REIT's monthly dividend is supported by relatively consistent income. The pandemic had a significant impact on the senior home sector, including LTC Properties tenants. Several people struggled to pay their rent, prompting several to declare bankruptcy. This REIT, on the other hand, leveraged its financial strength to weather the storm and offset some of the lost revenue with new investments. As a result, it has been able to continue its monthly dividend. LTC Properties rental income should rise in 2022 as market circumstances improve as the pandemic fades. With its recent investments, this REIT's high-yielding monthly dividend appears to be sustainable. Pipeline Pembina is number 4 on our list. Pembina Pipeline Corporation is a Canadian energy infrastructure corporation. It is responsible for pipelines, processing plants, storage terminals, and export facilities. Under long-term, fixed-rate contracts, the corporation generally leases the capacity to use its assets to other energy companies. These partnerships allow Pembina to generate consistent financial flow. Pembina has a strong dividend history, having continuously increased its payout throughout the years. As it completes additional energy infrastructure expansion projects, it should be able to increase its dividend in the future. Pembina has a large backlog of secured projects and several more in the development pipeline that will fuel future dividend growth. Pembina is investing in lower carbon projects in addition to continuing to support the movement of fossil fuels. To complement its wind energy holdings, it is collaborating with another Canadian energy infrastructure business on a carbon dioxide transportation and sequestration system. It is also looking into hydrogen prospects. These shifts toward greener alternatives should help propel dividend increases in the future years. Profits from real estate. This is number 5. Realty Income is the obvious leader in monthly dividend stocks. The monthly dividend company is how it bills itself. As of early 2022, it had paid more than 600 consecutive monthly dividends. Furthermore, since its initial public offering, IPO, in 1994, Realty Income has boosted its dividend more than 100 times, with the payout increasing at a 4.5% compound annual rate. This REIT has more than 25 years of dividend increases, making it a dividend aristocrat. Realty Income should be able to continue supplying investors with a monthly income stream that grows steadily in the future. In 2021, it will buy fellow REIT Verit, NYSE, VER. In addition, it purchased approximately $6 billion in smaller transactions. This buying spree will continue. Increase its cash flow per share by more than 9% in 2022. Realty Income has a lot of room to expand. The global market opportunity for the single-tenant net lease real estate it seeks is estimated to be $12 trillion. Meanwhile, even after completing last year's acquisitions, it maintains a healthy balance sheet to continue buying new properties. As a result, Realty Income should be able to continue extending its portfolio in 2022 in order to fund continued dividend growth. Green SL is number 6. Another REIT and the largest office landlord in New York City is SL Green. While the city's office sector has suffered some pandemic-related issues, SL Green has performed admirably. This is owing, in large part, to its emphasis on owning some of the city's highest quality office complexes. As the city's office market rebounds and office tenants focus on leasing excellent space for their staff, this REIT benefits. This office REIT surpassed its leasing objective in 2021 and anticipates signing even more leases in 2022. Companies anticipate to return to their New York headquarters in the future, based on the demand. Meanwhile, office buildings continue to be in great demand among institutional investors, such as pension funds, due to their ability to deliver consistent revenue. As a result, SL Green has been able to sell chosen properties at competitive prices. It utilized the money to pay down debt, repurchase stock, fund new projects, and make acquisitions. These considerations have also allowed this REIT to maintain its dividend growth. It became a dividend achiever in 2021, after achieving its 11th consecutive dividend rise. With market circumstances improving and new projects paying off, SL Green should be able to maintain its dividend growth in the future. Number 7 is Stag Industrial. Stag Industrial is yet another REIT that pays out a monthly dividend. Its primary concentration is on the ownership of industrial real estate, such as warehouses and light industrial facilities. These residences are in high demand. To overcome supply chain concerns, the pandemic encouraged e-commerce adoption and increased manufacturing in the United States. This has kept occupancy levels high while driving up rental rates, allowing Stag to produce consistently increasing rental income. Stag has been able to increase its dividend over time. The REIT's capacity to constantly extend its portfolio has been a significant growth driver. Since its IPO a decade ago, Stag has added more than 400 properties to its portfolio, bringing it to more than 500 buildings. This industrial REIT anticipates that steady growth will continue. It intends to spend $1 billion to $1.2 billion on real estate each year. When combined with the increasing rental income from its existing properties, Stag should be able to maintain its monthly dividend increase. Invest in stocks that pay out monthly dividends for recurring income. Investors can easily earn passive income by investing in monthly dividend stocks. They can utilize that money to cover their monthly needs or reinvest their dividends to generate even more recurring cash flow when they need it in the future. While many of firms offer monthly dividends, these safe monthly dividend stocks stand out as top choices for investors looking for a steady income stream that has the potential to increase in the future.